Hi everyone, welcome to the session. In this session, I'm going to discuss about some of the questions from incomplete records. So let's move on to this question and we'll see how to find out the solution. The following information were given in respect of SAM business. Inventory value on 1st January 2016 was 8,400. And inventory count as at 30th June 2017 showed inventory to be valued at 9,350. So this is the year end. So this is the beginning of the year. Sales for the year 30th June 2017 were 80,000. So you are given the total sales for the year ended 30th June 2017 as 80,000. So our financial period start from 1st July 2016 till 30th June 2017. Okay, and the business makes markup of 33 and 1/3 on cost for all the items that it sells. So what were the purchases during the year? Okay, now in this question what you are given is the opening stock. You are given the opening stock as 8,400 and also you are given the closing stock as 9,350. Then the sales for the period 80,000. Okay, and also you are given the profit markup as 33 and 1/3. This particular concept I have already discussed in my previous video. So if you want to watch that particular video, I have given the link above. So what you can do is you can watch the video in order to get a better understanding. Okay, so then you can come back to this particular question after understanding the markup and profit margin. So if the profit is expressed, okay, as a percentage of sales, okay, so this is called margin. If the profit is calculated as a percentage of the cost, it's known as markup. I have explained in that video, if the profit is expressed as a percentage of markup or the cost, this is the cost, what you need to do is you have to assume the cost as 100%. Okay, if you assume the cost as 100%, then it's very easy to identify your selling price. How do you identify? You are given the markup as 33 and 1/3. Just add the markup to the cost. So that is the profit. Okay, so 33 and 1/3%. So your selling price will be 133 and 1/3%. Okay, so this is as a percentage. Now, in order to identify the purchases, okay, so what you should do, you know how to calculate cost of sales. Okay, so now you have the sales how much? 80,000. Sales are given as 80,000. Okay, so then you have to deduct the cost of sales. How do you calculate cost of sales? Which is opening stock plus purchases minus closing stock. Is that right? Okay. So if you identify this, then that will be the cost of sales. So when you deduct the cost of sales, this will be your net profit. Sorry, gross profit. This will be your gross profit. Okay. Now, let's fill up with the available information. Now, sales 80,000. How much is the opening stock? 8,400. So take 8,400. And then you are given the closing stock as 9,350. So 9,350 should be deducted from opening stock plus purchases. Now, let me, okay. Now, so we need to identify the purchases. Okay. Now, what are the available information? We took sales, opening stock and closing stock. Now we need to identify the purchases. Now we don't know how much is the cost of sales, and we also don't know how much is the gross profit. But you are given the gross profit calculation. How do you calculate the gross profit? You are given the profit is based on the markup. So since it is based on the markup, what you have to do is the profit has to be added to the cost. You assume the cost as 100 and add the profit markup, then you will identify the selling price percentage. So basically, so selling price is 133 1/3, which is equal to this 80,000. Okay, percent. So if you want to identify the profit, which is 33 and 1/3 on the cost, which is 100%. So can't you identify now? Because percentage wise you know. So therefore what you need to do, simply 80,000 divided by 133 and 1/3% times 100. So if you calculate this, that will be 60,000. Okay. So cost of sales will be 60,000. So therefore your profit will be 20,000. Okay. So since you know the cost of sales now, 60,000, how do you identify your purchases? Simply what you need to do is you take the cost 60,000, your cost of sales is 60,000, then add back the closing stock and minus the opening stock. Okay, so this is the other way around. Now to identify purchases, what you need to do is, since you have deducted this closing stock, you add back and you minus the opening stock. So closing stock value 9,350 and opening stock 8,400. So when you take the total cost of sales plus closing stock minus opening stock, so that will be 60,950. Okay, so 60,950 will be your purchases. So just add it and see. 60,000 plus 8,400, how much is that? 60,950 plus 8,400, which will be 69,350 minus 9,350. How much is that? 60,000. See? So that is the cost of sales. So thereby you can calculate the gross profit also, which is basically 20,000. Okay. So this is the answer for this particular question. So we calculated the purchases because purchases was not given, and also you were not given the cost of sales and the gross profit also not given, but as a percentage wise the information were given. Based on that we calculated the purchases. Okay, so that's all for today. I will see you soon with another video. So I will discuss more questions on incomplete records if you have any doubts. So if you have any doubts or any questions, please comment below, and I will see you soon with another video. So if you like the video, what you can do is you can subscribe to my channel, and I will see you soon with another video. Thanks for watching. Bye for now.